Yeah, so first things first, markets. Let's talk about it. Probably we'll start with balls. What's going on, man? Are we bearish? All this 30K Bitcoin. Last week we were at, I don't know, like 2 weeks ago we were like 40K or something. Now we dropped back to 30K. Yeah, what's your thoughts on this?
I think we can safely say now that we are in a bear market. Okay, but that is not to say that we cannot continue building, continue learning, right? In fact, during the bear market, this is the best time. It's the best time to brush up on whatever knowledge that you might be short on. It's a very good time to learn. You can focus much more rather than just looking at the price every day. Coin market cap every single refreshing every 5 seconds. You know what I mean? So I would say take this positively, everyone, right? And for those who are not in crypto, yeah, you might be in the stock market or any other traditional market space. Also, everything is down. So I guess generally speaking, it's a downtrend for everyone. And also like the market follows the US market currently, right? So for example, you can say that Bitcoin looks at tech stocks or the traditional market space, and the traditional market space is looking at the Fed, and the Fed is looking at inflation. So right now, probably there's nothing much you can do. For me, I would continue learning and continue to DCA, dollar cost average. That's all I can say.
Oh, that's a fantastic answer. Just adding into your point. Welcome, Isan, by the way. Can I just do a sound check with you real quick?
Yeah, I'm back in.
Okay, yeah, we were just talking a bit about the markets, what's going on, are we bearish? And just want to add to your point, boss. You talk about checking the prices every day. I think majority of us wake up, the first thing we're going to look at our phone, check Bitcoin's price, So I've been trying not to do that. I've been trying to put my phone at, if you have iPhone, you can put a do not disturb mode. So I try to put 1 hour a day that I do not even, when I wake up, I try to let 1 hour go before I start looking at Bitcoin's price, so on and so forth. But what other methods do you have to actually prevent this addiction? Because sometimes people have addiction to keep on checking the price, they feel insecure. It's like a dopamine feedback. So how do we stop that? You want to touch on that briefly, on how you do that?
You want me to elaborate on that?
Yeah, go ahead.
Yeah. I would say this is a very unhealthy addiction, but I guess it happens to the best of us. But there are a lot of things you can do. If you zoom out, there's not everything is about crypto. Not everything is about money, right? If you lost money this week or the past 2 weeks, don't be discouraged, because I guess this is just a blimp on the road. And yeah, find a hobby, go out and have a walk, have a jog, go find some new hobbies to space out your mind a little bit. Read more, listen to music, just chill, go to the gym. There are so many more things we can do, not just refreshing the freaking F5 button every 2 seconds, you know what I mean? Yeah, so just find a hobby, read more books, listen to music.
Yeah, great point right there. Isan, you want to add on to this? What's going on in the markets? Are we bearish?
Okay, first and foremost, I would like to say that we are in a confirmed multi-year bearish situation with crypto. That's my opinion after what I see. There are many reasons for that. Number one, we are already breaking the all-time low of 2021-2022. Our support was in 32-ish thousand, and we have broke it quite bad. And unless we close the September being above that level, I'm optimistic to see a 20-ish thousand and sustain that level, or maybe even lower within the next few months. There are many other reasons for that to happen. Number one is that people are running to the de facto safe haven, which is not gold, unfortunately, but US dollar. Actually, if you look at the market, USD is the one being very strong, and crypto, just like any other assets in the market, are becoming relatively weaker, including other currencies such as Euro and other currencies lah.
Yeah, let's talk a bit about the flight to the US dollar, man. Why the heck is the US dollar so strong right now? So this is not just Bitcoin being weak itself. It's about the US dollar reaching its near all-time highs, the strength, relative to other currencies. And also, at this time of inflation, right, why isn't gold at its all-time high or something like that? You want to add on that, Isan?
Okay, number one, why do I say US dollar is strong? I mean, everyone knows it's becoming stronger, but what objectively prove that it's stronger? Well, everyone can have a look at DXY chart. At the DXY chart, US dollar is like at the all-time high. Okay, so it's always a question of why, ironically, gold wasn't the safe haven that everyone thought it would be. In fact, gold price have gone down much more than anticipated, and alongside it is Bitcoin. Okay, let us just go to Bitcoin number one. Why it doesn't become the so-called safe haven everyone expect it to be? First and foremost, Bitcoin never was designed to become a safe haven. It was designed to become an SOV, a store of value. So where does it get its intrinsic value? So it gets its intrinsic value from the mining cost plus profit. It has been overinflated over the mining cost over the past few years. The latest market value for mining a Bitcoin is about 18,000 per Bitcoin, 18 to 20,000 depending on country, and we have been on top of that level for the past few years, for the past 1.5 years. So what we see is just a contraction going to the mining value. Why Bitcoin raised above the mining value over the past few years? The answer is very simple. Because everyone looking at it as a form of tech investment. That is why it ended up being correlated to the tech sector in stock. So when everyone runs away from Bitcoin, it becomes the SOV. It reaches its mining value. Now is the reaching point where miners will start shutting down their machine voluntarily because the cost of mining is much more expensive than the cost of buying a Bitcoin. So once it touches this value, it will rebound. But I don't think it has touched fully. It will go a bit lower, maybe around 20-ish before it rebounds. So that's the reason when it comes to Bitcoin. Whereas for gold, as we can see, one of the accelerant of the issue is because of the Russia-Ukraine war. So Russia has been known to be the hoarder of gold alongside China. And because of the war, with all the sanctions and everything, there is actually less circulation of gold in the market. And there's also a fear of holding gold because of the war, actually. So that is why everyone is holding US dollar. It's the most liquid asset in the market. Alongside the inflation, alongside the world food crisis, it is the most interconvertible asset in the market currently. That's why it's the strongest in the market. You can't easily convert your gold for food. You can't easily convert your Bitcoin for food. But USD, the real hard USD, is the easiest to do it. That's why everyone is running to US dollar, unfortunately.
Exactly. I think you've spoken a lot of wise words right there. In particular, why everybody prefers the US dollar is, we can't deny it. US dollar is the world's reserve currency. Right? And the majority of the world's commodities is still priced in the US dollar. And hence, US dollar is also the most liquid asset. So therefore, whenever in times of inflation, war, panic, everybody will flock to the strongest currency in the world. And that is, so far, the US dollar. We have someone up here. Sunny, how are you, Sunny?
I'm fine, thank you very much.
Hey, you want to join into our topic tonight, talking a bit about Bitcoin, bear markets, inflation? Go ahead,
Yes. Thanks for the very interesting topic. I think very timely also. And I just wanted to add a bit on the last question that you had, because I'm actually in this space with regards to both gold and also dollars and stuff. You see, the US dollars basically, the strength from the US dollar is basically the currencies basically trade on very strongly on what we call interest rate differential. The difference between interest rates of one particular currency against another particular currency. So in this particular respect, as we know, the Federal Reserve has hiked, and expectation is for continued hikes to be quite aggressive. So what we're seeing the US economy, or rather the US dollar, having what we call a very aggressive monetary policy stance. vis-a-vis other countries like Europe, which is now lagging behind because there's fear of a recession. Many Asian central banks are only just hiking rates and not aggressively and such. So the differential between US rates and the rest of the world is now widening very fast. And I think that's really why the US dollar is going up. And back to gold. If you look at gold, I mean, it's not gone anywhere year to date, but relatively speaking, that's still quite good compared to some other markets, like, the crypto markets are down like 50 to 90%. Stock markets are down like 15 to 30%. So basically, from a relative asset class perspective, I think gold is doing okay, although I'm also disappointed that it's not going up, but that's the reason behind it. And the reason is gold, if you bring up what we call a real interest rate chart, which is nominal interest rate minus inflation, you'll find that basically as it's really a negative correlation with gold. I mean, it's a bit technical, but what I'm just trying to say is when US rates go up, it actually dampens gold prices. And this is exactly what we're seeing, because of what I said in earlier on. As US rates aggressively go higher, it puts a cap on gold prices. But having said that, I mean, our view is basically that there's a huge amount of inflation in the pipeline. What we're seeing today is basically supply chain disruption, some Ukraine stuff and things. What we're not seeing yet is basically the agricultural supply that's supposed to come online, which is not coming online for two reasons. Number one, the Ukraine-Russian harvesting season for wheat, for example, that's disrupted totally. And those two guys are basically like 5, 10, 15% of world wheat supply. So that's not coming online. Number two is the weather. You're seeing places like India and some other places, basically the weather is really impacting their local crops. And because of that, they are implementing what we call export bans on their agriculture. So that again adds onto it. So all of this will make its way into the system, and I think it's going to show up really on CPI figures around the world in the next 1-2 quarters. So I think that would be good for gold, because that would then send what we call the real interest rates lower, because we're going to have a situation where inflation is going to be high, and potentially what we're going to see is slower growth. So we're going to nominal rates are not going to be high at the same time. Yeah. I'm sorry if it sounds technical, but that's really what's driving gold at this point. So if you have time for the listeners, call up what we call a real interest rate chart, call up the gold chart, and you see an exact negative correlation between the two. Yeah. Sorry, that's just what I wanted to add. Thank you.
Yeah, that was a very long, but I think it's a very wise answer also. A lot of points you mentioned right there, but I'm sure majority of the people would think of it as like, hey, I don't really know much about this. Maybe this seems like alien language to me. So I do want to touch a bit on your points over there. It's really interesting because what the general public knows is that interest rates equals to the cost of borrowing, right? But how does it affect the dollar strength? I think that's what people are going to wonder. How will raising or lowering interest rates affect the economy? Do you want to talk a bit about that before we move on?
Oh yeah, if you're just talking purely about currency, interest rate differentials matter because the currency with the highest interest rate is going to attract more inflows, given that, first of all, the forex market deals in millions and sometimes billions of dollars. Just by holding one currency which has a higher interest rate, even if it's 10 basis point, means that you're earning more on that currency versus the other currency itself. So in this particular case, we're talking about really a very big interest rate differential between the US and other currencies. We're talking about 50, 100 basis point, 150 basis point, 1.5%. So holding the US currency itself has its benefit because you not only get what we call capital gains, but you also get the yields from holding that currency. So it does matter when it comes to currencies in terms of interest rates.
Yeah. In a very simple sense, right, I think at the end of the day, how it affects the economy is that when the interest rate goes up, the borrowing costs also go up, because now for you to take loans, it costs even more. And when you borrow less, people actually spend less and they speculate less. Hence, that's why the stock market is not really moving anywhere right now. In fact, it's actually dropping, enter into somewhat of a bear.
Yeah, what we're seeing now in the US is the Federal Reserve is basically being pushed into a corner, because unlike for the past 10 years, the Federal Reserve could actually continue to just keep monetary policy very loose because there wasn't any inflation. Every time the stock market came down, they basically pumped in more money because to them, they wanted to stimulate the economy. They wanted what we call wealth effect. Right now, they are now in the mid. They're torn in between two things. One is they're torn in between high inflation, and two, trying to sustain what we call some of the asset markets and even the economy. But if you understand the mandate of the so-called Federal Reserve and also many central banks in the world, it's price stability. And when you talk about price stability, that means they will prioritize keeping price stable over that of the markets. And really that's what many strategists on Wall Street now is looking at. And that's why we see the stock market being a bit shaky, is because people now believe that the Federal Reserve is no longer providing the so-called Fed put, which is i.e. supporting the stock market, but they will allow for lower asset prices because of their pursuit of price stability, i.e. higher interest rates to dampen inflation. But again, that is another debate. You know why? Because people are saying, hey, look, inflation is caused by supply chain breaking down. So basically, it's a supply-related issue. It's not a demand-related issue, where else your raising of rates dampens U.S. demand, U.S. consumer aggregate demand. So it's really a tough situation, a tough place for the Federal Reserve to be, and that's why we often hear in many commentaries the potential for the Fed to make what we call policy mistakes.
So to summarize whatever you just said, right? We're fucked lah. We're pretty.
Yeah, a bit of a crude language, but it's a difficult situation. I think what we are facing now is after 10 years of basically a very easy way to predict markets, we've come to a point where I think markets have actually changed direction. Many of us may still feel that there's this recency bias. So a lot of people are still buying on dips and such. I honestly think we've moved into an environment where the cliche is not losing money is making money. So if you're able to keep your capital and not lose money, you're actually making money. And that is why you also find certain people saying cash is king at this particular point in time, even though you get negative real rates, negative real returns because of inflation. But at the very least, you're not losing 10, 15, 20%. If you're in crypto, you're losing 60, 70, 80%. So that's really the environment we're in. I think most of your listeners today, you come from a very young generation. The last time we had something like this is basically in the year 2000 to 2003. And for many of you who may just be in secondary school back then or even in university, you would not have traded the markets. But from the year 2000 to 2003, it was really a slow bleed. I mean, it was really just bleed. The markets were bleeding very slowly. People were coming in buying the dips almost every month, every day. And at the end of the day, they just died because it bled them to death. Because it was just a slow move down. Overall, it was a 50% move, but it just moved down over a period of three years. First came the dot-com bubble, then came the corporate scandals, Enron, WorldCom, then came the 9/11.
Hello, Mr. Sunny? Is it me or Sunny is disconnected?
I think it is
Disconnected.
Okay, I think he'll be back soon. But yeah, it's a very good train of thoughts right there. And basically, he was just talking about inflation being a big problem for the Federal Reserve. Sunny, you still here?
Yes, I am. Yeah.
Yeah, because you got cut off just
sorry.
now. You want to finish?
Which part was that? Sorry.
You got cut off just now. You wanna finish your point?
Where did I get cut off?
I think you cut off when you were talking about the inflation stuff and the real rates, and when we were born younger.
Okay. Okay. Just sorry to take up most of your time. I'll step back after this. Yeah, I was just saying that basically I think most of your participants in the room today, I think when it was the year 2000 to 2003, I think the majority of you were either in school, in university, or you probably just came out to work. You weren't actively participating in the stock markets, basically. But coming from someone like me, I'm old enough to tell you that basically from the year 2000 to 2003, it was a slow bleed. Slow bleed meaning to say that basically the markets were bleeding just gradually over 3 years. The top to bottom retracement was about 50%. And the bleeding came because there was a series of occurrences. We started off with the dot-com bubble bursting. Then we had the corporate scandals, Enron, WorldCom. Then we had 9/11. Then we had SARS. Then we had the Iraqi invasion and so on and so forth. So all these things really, so people who actually tried to buy the dips, so to say, ended up really in a bad situation because markets just went pop, lower. So I personally think we've entered this kind of environment. We probably entered it from late last year, and that's why we've seen risky assets coming off and such. The Federal Reserve is changing tack. They're no longer pumping in money. They're doing quantitative tightening. They're no longer loosening monetary policy. They're tightening policy, and it's across all central banks in the world. So we have what we call a structural change. So everybody has to be careful because recency bias, i.e., thinking what happened for the past 10 years is going to happen for the next 5 years or even 2 years, I think that kind of thinking will get you into trouble. So really, like I mentioned earlier, this is a phase where I think not losing money is actually making money.
Yeah, in simple terms, like what you mentioned just now, like cash is king, and the broader markets is definitely going to still fall because right now the Federal Reserve is talk about raising interest rates, right? Yeah, we will discuss more about this in a separate session. I think we need to do it, and I'll probably will invite Mr. Sunny also to talk about economic history and how it will affect the future markets. But Boss, you raised your hand. What's up, Boss?
Yeah, I was just gonna ask Mr. Hamid here. Actually, recently the former Fed chair, Mr. Ben Bernanke, right? He came out to say that this Jerome Powell guy, he's a little bit too slow, and his decisions were a little bit too late, too slow and too late. But what could have the Fed done to actually smoothen out this ride? Because I think they're pretty much in between a rock and a hard place. Whatever they do now is definitely gonna decimate the market anyways. If they raise interest rates, then X will happen, and if they don't interest rates, inflation will keep rising. So what could they have done better? In my opinion, I don't think they could have done anything other than just increasing interest rates.
Yeah, I mean, it's a good point. When the Fed was behind the curve, everybody blames the Fed for being behind the curve for saying that inflation was only transitory back then. I have to say, to a certain extent, I would have agreed with the Fed because back then it was all relating to supply chain. And if we know what supply chains are, supply chains tend to work themselves out after a certain period of time because they adjust. What I think the Fed didn't expect was basically the Ukraine situation to come in, and Russia and Ukraine being very large soft and hard commodity producers really just adds on to it. Then now we got China lockdown and stuff. So really, I think they didn't see it coming from the left field. So right now, instead of just being transitory, inflation is more permanent, more entrenched in nature. Okay. So that being said, now the big question, not only you're asking it, but myself and everybody is, what can the Fed do? What the two choices the Fed has is basically either to combat inflation by raising rates, and there's no free lunch. If you raise rates, basically aggregate demand, i.e. growth, will start to slow. So which one will you choose? And if you look at the mandate of central banks will fight inflation. They will. It's not to say that they don't care about growth, but they'll say that that's my primary objective. We saw that basically in the mid-1970s when Paul Volcker, the Fed chairman back then, I think raised interest rates to about 16-17%, if I'm not wrong. In the US, we're talking about double-digit to basically fight inflation back then. So, number one, you're behind the curve. Number two, we've got some more inflation coming in, as I mentioned earlier, because it's in the pipeline. I won't be surprised if the Fed is forced to actually be more aggressive on raising rates, and as a result we end up with something called stagflation, i.e. high inflation, lower growth. So basically that could be a key word we'll start to hear more and more again, I think, in the coming months. Yeah,
I have to agree with you on that. But the Federal Reserve has been enacted, I don't know, since the early 1900s, right? And it's the objective is to really curb this kind of market downturn and try to smoothen out the ride, right? But after 100 years,
actually, the Federal Reserve's main mandate, there are two main mandates. One is price stability, the other one is full employment. The market one was the past 10 years, because for the past 10 years, they were afraid of, we after 2008, we were on the brink of a depression. And deflation was the key worry. So what the Federal Reserve's main aim then was, because inflation wasn't a worry, full employment was a worry, and the best way to combat that was actually to create what we call a wealth effect. And how best to create a wealth effect? You pump up all the assets prices, home, stocks, bonds. You get that up, basically you create a wealth effect. And they managed to do that because of quantitative easing.
Right.
Yeah.
Right. Thank you.
So just touching on the Mr. Sunny and what Balls were talking about. If you guys think that this was alien language, right? So let me just break it down for you in very simple terms. Okay. You cannot call politicians as the most powerful people in the world. Actually, the most powerful entity in the world is actually the Federal Reserve. They are a private entity. They are independent from the government. They manage the monetary policy, and their goal, like what just now Mr. Sunny mentioned, is to maintain price stability and maximum employment. So to say that this doesn't relate to Malaysia at all is not wise, because the US dollar is the world's reserve currency. Majority of commodities are priced in US dollar. Therefore, how the Fed manages the money printer, right, will have a ripple effect around the globe. Now, the Fed does this by two methods. One is they will adjust the circulating supply of money through buying or selling assets from their balance sheet. These are so-called treasuries, okay, by buying bonds, etc. The other one is they can adjust interest rates. Now, interest rates is just the cost of borrowing. Whenever you have a mortgage loan or blah, 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 right? If the interest rates go up, it means that the cost of borrowing goes up. But at the same time, when you leave it in a fixed deposit or whatsoever, the yield that they give you is much higher for bonds in this case also. So lowering rates will lead to inflation. Raising rates could lead to a recession. That's in very, very simple terms what the Fed does. And correct me if I'm wrong on any point on that one, Mr. Sunny.
No, you're right in general, yeah.
Yeah, so Balls, you raised your hand about this?
Oh, sorry again. Just now talking about the Federal Reserve, right? Forgot what to ask already. Okay, so I mean their main purpose is to stabilize price and also to for full employment, right? But over the past year, you see the S&P 500, the Dow Jones Index, the Nasdaq, or even the gold markets, right? There's no way you can really escape the negative yield or the negative returns that everyone is experiencing, right? So is there, like, I don't know, could there be a magic decision that Jerome Powell could do to actually have both, not choosing one of the two evils, right? To prop up asset prices or to curb inflation. But shouldn't that the existence of the Federal Reserve to actually prop up?
I know, yeah.
To curb inflation as well as preserve wealth.
If they could, they would.
Yeah,
to be honest, if they could, they would. But right now, for example, one of the main drivers of inflation, which is very worrisome, is the excess liquidity that the Fed has in the system. If you just call up the Federal Reserve balance sheet, which shows you basically the amount of quantitative easing that they've done. Right prior to COVID, March of 2020, they had already pumped in basically about 4 trillion worth of liquidity into the system. That's compared to 2008, which was 1 trillion. So they did 3x on liquidity just prior to COVID. From COVID until last year, it went from 4 to 9. Over that really short 18 months period, they pumped in basically an additional $5 trillion into the system. That amount of liquidity, if you don't start absorbing it out, that is really fuel something that will fuel inflation. So that's why they're doing quantitative tightening. So at the same time, you draw a S&P chart together with a Fed quantitative easing chart, and you find they almost go hand in hand, because why? Pumping liquidity makes its way into the S&P and makes its way into other asset prices. So logically speaking, pull that liquidity out, asset prices will come down. So they are in a hard place now, because I don't bring it out, it's going to fuel inflation. If I keep it there, it may support the markets, but I've got inflation to deal with. So I think what they've done, I think they've tried to just not be too aggressive. They've already announced something like 100 billion withdrawal, quantitative tightening a month, which leads up to about 1.2 trillion a year. So it will take about 3-4 years in order to pull out everything that they put in after COVID. But again, it's dynamic, it's not static. It means to say that it really depends on the situation. If the inflation goes up from 8 currently to 9 to 10, I think they may turn aggressive on pulling money out also.
Yeah, I guess it's all part of the boom and bust cycle, right? We're currently
correct,
obviously in the bust cycle right now.
So when you see crypto falling by 90%, when you see basically, the bond markets basically in the first quarter, the first 4 months of this year was one of the worst sell-off in the bond markets. Bond markets basically fell about 8, 9, some of them 10%. Although we don't think that's a lot, in the bond market, 10% is a lot. Because you're talking about yields of 1%, 0.5%, 10% really basically wipes out 1 decade of yields on a particular bond, for example. So 10% move in the bond market is a big move. So we're seeing this huge adjustment. Because why? Because the past 10 years, bonds had increased, stocks have increased, cryptos have increased, properties have increased. So we're now resetting everything. The bond market is resetting, the crypto market is resetting, property market is going to reset, the stock market is gradually resetting, and there's even, if you look at every Wall Street analyst, everybody's predicting now at another 15%, potentially even a 20% decline from here. Goldman Sachs recently came out to say what, and I was quite shocked to hear them say, look, we think market is going to go up by 5%, but we are telling our clients to sell, because we think market is going to go down another 15% from here. So everybody's taking this as if it goes up, it's time to unload, lighten up, because we think that the trend actually is going to go lower.
Yeah, very fantastic point you covered there also. The amount of money printing is crazy, just as you mentioned. If I'm not mistaken, they printed so much amount of money in 2 years than they ever would in the previous 100 years, if I'm not mistaken. Then they also handed everyone free money. Remember the stimulus checks? I'm sure some of you guys have read about it. Every single American had about $1,400 into their pockets. You get a stimulus check, he gets a stimulus check, your mom gets one. And at that time, during peak COVID, right, everything was in lockdown. Okay, businesses weren't open. Everybody stayed at home. They had nowhere to spend their money. So some of that money, or maybe majority of that money, definitely goes into the stock market, Bitcoin, etc. That's why we see all this going last year alone during the COVID itself. Just rocketing, Bitcoin was just crazy. It went from 3,000 to its all-time high of 69,000. Just imagine how much money was printed. Take a look at the S&P index itself. The gain last year alone is just bonkers. And back to your point right there, I think recession is also inevitable. No matter what the Fed does, it's just going to drop even further. That's in the case of Bitcoin also. And it makes a lot of sense what you're talking about right now. I think we will just leave this topic right here, unless you guys have more questions to ask about the economy. I want to really thank Mr. Sunny for all his great thoughts right here. And we will definitely do another Twitter space regarding economic history itself and how will we, I would say, fight inflation, so on and so forth. But the first half of the session, we talk about inflation. Next half, we talk about something a bit more close to us, in this case, Luna. Let me invite all the rest of the other speakers up first. Mr. Sunny, you can still stay here if you want to, if you're affected by the Luna crisis.
I would like to hear everybody's. Yeah, I've been following it very closely also.
Yeah, it's been a very crazy time, and let me just look for the rest of the speakers first. We have CG and Marish. I hope they can come up. But I'll just hop on over to Isan first. Hi, Isan. Let's talk a bit about Luna.
Hi,
What
hello.
happened to Luna, man? What happened?
Okay.
Just go.
All right. So first and foremost, algorithmic stablecoin is a game changer in the market. It's very different from your USDT, from your USDC, because these are essentially just banks waiting to be called banks. When you have USDT, when you have USDC, they store money in their banks as private corporation, and eventually when the regulation against stablecoin will come, they are just digital version of banks. But algorithmic stablecoin is a game changer because they are pegged to US dollars, but they are essentially sovereign money. They don't follow regulation like the normal US dollar do. They are printed and supplied by third parties with no control direct from the banks. So it has been talked about multiple times about the risk of this stablecoin, not exactly to the user, but actually to the market itself. So what happened in Luna and UST was a design flaw. That's the problem. That's the problem from start. Luna and UST use what is called as a dynamic supply. So basically, yes, people call it Ponzinomic, is true, because the Luna supply is essentially unlimited, just like how people printed money, and the UST supply is also essentially unlimited. Unlike other forms of algorithmic stablecoin, for example, like DAI. DAI has been in the market for so long, 5 years, and it has a very different system than UST Luna, because that is backed by Ethereum. So UST expanded so much in the market just in the span of 8 years for many good reasons. Number one, it was designed on IBC, on Cosmos. So it's fast, it's cheap, the transaction is very smooth. And because of that, a lot of developers moved into the Terra ecosystem. A lot of the apps were built and they were much stable compared to their EVM counterparts. For example, like on Matic or Binance Smart Chain or Phantom. So because of this, because of the massive growth in Luna, there was also a massive growth in UST. Apart from that, there were a lot of derivative market, so-called DeFi 2.0, which came into Luna, which is previously not available in the other chain. For example, like the Delta Neutral strategy, the DeFi 2.0, the Borrow Lend strategy, the Auto Repay strategy. Many of these this kind of AMM and DeFi does not exist in the other chains. And this caused the UST market to bloom 4 times due to derivative application. But like I said, UST and Luna, they are not backed by anything. They are not backed by anything. And Do Kwon realized it. He realized it, I think, back in November. That is why LFG started to buy Bitcoins, Avalanche, and also the other coin to back this chain. Unfortunately, he was a bit too late despite the very aggressive buying of Bitcoin. UST was challenged probably by manipulators. Many believe they are related to regulators, but of course, we are not some kind of conspiracy organization. So we know that it was manipulated. It was noted that someone bought a large sum of UST few weeks before the attack. They bought it directly from LFG in exchange for Bitcoin, and they used that UST to first dump the Bitcoin market. So when they dumped the Bitcoin market, the LFG reserve reduced, and then they dumped the UST by dumping the UST into the curve pool. So for many people who don't know, the curve pool is a mixture of multiple stablecoins. You have your USDT, you have your USDC, you have the UST. And whenever one coin becomes dominant in the curve pool, the other coin will have an effect. So this is what happened when they dump a lot of UST into the curve pool. The USDT and USDC become more dominant. UST becomes diluted. That is when the UST first defect occur. So Do Kwon tried to balance things out, but at that time there were already public fear. Anchor withdrawal was in billions. in billions in matter of days. And after that, these so-called bad actors attack the UST pricing 9 times. Okay, 9 times. So when the price of UST drops to 0.88, there were an extreme fear of UST, and at that point, there were a lot of derivative position who already get liquidated. Logically, you don't get liquidated on USDT position. It virtually is impossible because it was supposed to be a 1-1 parity. And that is why a lot of people are in very high leverage position between USD and USDT, because after all, it's very low risk. You just matter of 1 cent, you can make tons of money. Imagine you depict something that was supposed to be low risk to 0.88. There was massive liquidation across the market. So this massive liquidation resulted in a cascade of liquidation. First, it affected the USD, then it affected the Luna. And because of this, they already know Duquan is going to sell his Bitcoin, and he has lots of Bitcoin. In fact, LFG was, I think, the 6th or 7th biggest reserve of Bitcoin at that moment. So when they sell the Bitcoin, it creates a cycle. Selling of Bitcoin causing lower price of Bitcoin in the market, putting a more pressure on the USD price, causing it to become more lower, causing Duquan to sell more of his Bitcoin until the LFG reserve becomes nearly empty. At the current rate, he only have 300 Bitcoin. So because of that, Luna and USD, like I mentioned, it doesn't have a finite supply. It's relatively infinite. So programmatically, the smart contract will mean a lot of Luna. This is what happened to Iron Finance in 2020. So it prints lots and lots and lots of Luna, but because there is an excess supply, it becomes valueless. So at the end of the day, Luna reached near zero. So even you have 1 million and you times 0 equals to 0. Because of that, USD doesn't get its back anymore, and the whole system fails. They were also noted some systemic attack on the Luna and Cosmos ecosystem. Luna, as we know, is a smart contract money. It was designed to up the price whenever there is a price differences. It was noted that at the time of attack, nearly 10 to 20 of the top validators shut off their machine. For example, Binance themselves, their validator machine was offline for 14 hours during the attack. So a lot of people believe it's coordinated, and despite the fact that all money trails are on blockchain, because there is no clear KYC in the market, there is no true strong point to put your finger on anybody or any entity. So that's what's happening to the Luna and USD.
Wow, fantastic points over there. At the end of the day, to keep it simple, it's a death spiral, like what we call in an algorithmic stablecoin term, right? Because a broader market sell-off or a whale trigger a massive sell-off, then the rest of it is fueled by investor panic, and then everybody panic sold, which caused even more liquidations for those who have high leverage, because nobody predicts that a stable coin will fall off its peg. Right? It's called a stable coin for a reason. It's supposed to be stable to the US dollar. But if you do not know how Terra works, allow me to just very briefly explain this. I wrote a thread about it recently also. But just remember, in the market, there are a few types of stable coins. There is commodity-backed stable coins. There is asset-backed stable coins. In this case, let's take an example as USDC and USDT, right? These are called commodity fiat-backed stable coins because they are supposed to be backed one-to-one with physical dollars in their reserves. But we know that's not the case in terms of USDT. Now, when you look at UST is a bit different because UST is called an algorithmic stablecoin. Okay, it relies on an algorithm which burns or mints Luna or UST tokens to balance UST's peg to the US dollar. Okay, so within the Terra ecosystem itself, just treat it as like you can access Uniswap, right? It's something like a DEX, but it's for Terra only. In the Terra ecosystem, traders or arbitragers, they'll be able to swap Luna for UST or vice versa at $1, regardless of the current market price of either tokens at that time. Okay, so that means you can use this knowledge whenever UST falls above or below the peg to kind of arbitrage and bring UST back to the peg. Because if UST is trading above the peg, you head over to the Terra ecosystem, you buy $100 worth of Luna. Since $100 worth of Luna is always 1-to-1, is equivalent to 100 UST. And since UST is above the peg now, you'll be able to sell UST at a premium, and then you earn a little bit of profit. And that's how you increase the supply of UST when you do this. But if you're confused on what I just say, just remember that there's this thing called a death spiral. When people run away from UST, right, more Luna gets minted. Okay, when people sell UST, more Luna gets minted. They go to the ecosystem, and then you have yourself a hyper, mega, ultra inflation. But I will pass it over to Balls, perhaps Balls, or maybe Urshad. Urshad has been pretty quiet recently. Urshad, are you still here?
Yeah, I'm still here listening.
Yeah, you want to talk a bit about the Luna crisis?
I don't have much details about the Luna crisis, but basically, I will give some very layman advice, especially during the bear market, because of course the common term people will say you can do DCA and so on and so on. But I will share something. For example, back then, of course, if you have any external income, you can have earnings, and this is the right time for people to accumulate any fund coins or any investment that you believe the fundamental is very strong and it is worth it for long terms. But there is a separate strategy where mostly when we compare charts, right? When we compare charts, we compare any coins versus tables. It can be versus USDT or BUSD and so on and so on. But what if I give an opinion where, what if right now you compare, if you are bullish on either, for example, Ethereum slash BTC. So if you are in this space of pairing, so which means every time you see Bitcoin is stronger than Ethereum, you can do the swap, and every time Ethereum is stronger than Bitcoin, you can swap. Because at the end of the day, if you ignore, because of course when it comes to bear, people always compare to the fiat. Right? When people compare to fiat, then people know, oh, it's up and down. But what if I give a simple analogy? It's something like you're in the matrix, you unlock your vision. What if I don't care about fiat? My pairing is actually BTC Ethereum, example. So either way, I will continue swap because I didn't lose, because I convert my maybe Bitcoin to Ethereum. When Ethereum up, I convert back. So at the end of the day, I will keep on increasing the numbers of each coin. So this is some ideas that I love to share, because I believe during bear market, this is one of the best strategies that people can implement. So by ignoring the fiat price, because at the end your objective is you need to increase the numbers of either Bitcoin or Ethereum or whatever pairs that you are interested to invest in. So I believe this is one of the best strategy that you can also look into, instead of course some people they have their additional income where they can, maybe some of 10% or 20% of their salary they buy a crypto, they can. But what if someone that, okay, I don't have much fund for me to inject, but I can play around within these two pairs, means crypto to crypto, because your objective is very simple and straightforward. If you are looking into long term, of course Bitcoin is one of the way. Your objective is always to increase the numbers, get as much Satoshi as you can. And if you are bullish on Ethereum, you can also do so. So this is a simple analogy, and based on the idea that I present right now, hopefully it opens up a lot of people's mind who are listening.
I just want to add, this reminds me of my time during the gold, silver era. Even among gold and silver traders, there were a ratio, we call it the gold-silver ratio, and you follow the same rule. We ignore the market price, we just see the ratio, gold up by silver, silver up by gold.
Yeah. So it's somewhat like an arbitrage also. Urshad, you're an arbitrager also. Are you one of the whales who bought and dumped UST?
No. But I think again, because our mission, right? Our mission is, even for me, my mission is, we can see the fiat price comparison as maybe one of a satisfying factor. Because when we see, okay, our value double or our investment value triple, but deep down inside, my actual strategy is actually to accumulate as much Satoshi as I can. Right? Every single Satoshi is very crucial, because for me, I see an investment not for 1 year, 2 years. I'm looking for a generation. I'm looking for my kids, basically. So if I am on this very long run, and the best way for me to silence the noise is actually I can do that type of comparison. So either way, whatever price it is, if I have, for example, if I have one Ethereum, I always have one Ethereum. So if I have one BTC, I always have one BTC. So until a point where people will realize one BTC is always one BTC.
Yeah.
I think Irshad, I think it's fair to say that Irshad has read the entire book of Bitcoin Standard lah.
Of course.
Yeah.
He even recommended our ex-prime minister to read it, I suppose. Yeah. But I do want to shift this topic over to Sunny, just to put you on the spot. Sorry. What do you think about Bitcoin? Is it what we need? Because you are an economist, you Financial Alliance SPOR, I saw your profile. What do you think about this? Is it a Ponzi scheme, or is it something more that is worth our time?
Crypto in general, Bitcoin, or specifically, or Luna? Sorry, which one is it?
Let's just stick with Bitcoin, because Bitcoin is different from all the other crypto.
Okay. I personally think that I'm in the camp which think that Bitcoin in the future will probably eclipse gold as the store of value. I think it's everybody argues that it's merely it's merely codes. What's there's no value, there's no utility behind Bitcoin and so on. But if you look at gold, it's the same thing. Gold doesn't have utility behind it, from the perspective that it's just a chunk of metal there. There's very little industrial use for gold. The only utility that gold has basically is the utility that individuals, central banks attach to it as a store of value, and that has been over many 100 years. Of course, women will take it and use it as jewelry, and that's the utility there. So again, if you ask Warren Buffett will say it's just a metal, a relic which doesn't give you dividends and such, which is exactly Bitcoin. Bitcoin by itself doesn't give you dividend. Bitcoin by itself, you can't take Bitcoin and you can't plug it into a computer and use it as part of a computer. It's just really no use. So the beautiful thing about Bitcoin is it gets its price based on what we think it is. Okay, and so and the advantage we have from Bitcoin versus gold is gold had become a very controlled item. I mean, I don't know whether listeners know that, but basically, I think a couple of years ago, there's always this London fixing for gold prices, where they call half a dozen banks to fix the prices, and those banks were basically, I think the majority of them were basically brought to court because they were manipulating and colluding to fix gold prices. So gold has also become this kind of asset which has been manipulated. Bitcoin would be much more difficult to actually manipulate Bitcoin. So I do think that at the end of the day, Bitcoin's market cap today, I think, unfortunately, has retreated to about, I think, half a billion or sorry, half a trillion, 500 billion. Gold's market cap is probably about 11 to 13 trillion. I think in time, Bitcoin's market cap will eclipse that of gold. I think it's just a matter of time. Already, while you see Bitcoin price fall from 60,000 to 30,000, that's one thing. When you look at the adoption itself, when you look at who's now using Bitcoin, which institution now has announced that they're going to allow, for example, Fidelity in the US, they're allowing the pension, they're allowing their so-called EPF equivalent to use Bitcoin to buy, to use EPF to buy. There is really this growing adoption of Bitcoin, while it's not reflected in the price because the price has become quite volatile. Eventually, that's the fundamentals. So I think eventually that will show. And I'm not surprised if Bitcoin, bottoms out maybe 20,000, max 15,000. We already know. And one thing about crypto is the beauty of crypto is it's so transparent. I think those of you who understand crypto, you can see every single movement on chain in the accounts. I know how much is moving from which account, and institutions are basically already starting to pick up. So I think the bottom is probably, again, this is not financial advice, but this is my own personal view. I think the bottom is basically 15,000, probably around there. And I do see much higher prices in the years ahead. So I personally would say it's here to stay. It's not a Ponzi. I think the problem with a lot of people when they first come to get to know about cryptocurrencies, the approach is wrong. They look at the word currency and the volatility, and they say this is a scam, or this is highly speculative and such. Well, they fail to understand that basically, if you look at it, behind the majority of cryptocurrencies is a project. It's really a technological project behind it, and these projects are based on blockchain and such. So if you were to ask me and I were to explain this to my kid, for example, I'll say, look at crypto as basically an ecosystem by itself, okay, being run by basically companies, because behind every crypto is a company. Cardano, for example, if you've heard of Cardano before, IOHK is basically the company running Cardano, or and if you look at Cardano, while Cardano is the coin, what's the project? Project basically Cardano is the blockchain. Cardano goes basically to create a utility in different countries. I'll give you one very quick example. In Ethiopia, which is the country in Africa, Cardano's blockchain is being used to provide digital identity to every single student in Ethiopia. So each student will have their own digital identity. So what's the benefit of that? All their marks will be keyed into that. Once the marks are keyed in, it basically is immutable, cannot be changed. You cannot change once you key into it. So it prevents teachers from being bribed, changing it, and so on and so forth. For the policymaker, I now have the digital database of every student in Ethiopia. I can straight away tell who's doing well. Okay, let's send these guys over to the Olympiad for physics or math because they're really good. Oh, these guys are not doing very well. Let's holiday time. Let's arrange for them to do basically additional classes so that they can move up the ladder and such. Yeah. So for policymakers, it's great. So these are really the utilities behind crypto, rather than we just look at it and say, oh, it's so volatile. Oh, you can lose so much money, and so on and so forth. So I think if you focus on that, you will understand, like I understand, and I think many in this group understand, that certain cryptocurrencies are here to stay, and they can only grow. Sorry, pass you back. Yeah.
Perfect point right there. I couldn't have added more stuff. There's a lot of dense, very greatly packed information. Boss, go ahead, man.
Yeah, I would have to agree with Mr. Sunny here that crypto, or rather Bitcoin or Ethereum, is here to stay, right? But it's sort of like waiting for a killer application, right? Fast payments, free transactions, and all that. But I also want to argue that Bitcoin has already have this technology. It's called the Lightning Network, right? I think a lot of here in the speakers panel here also knows, right? The Lightning Network is a layer 2 solution to Bitcoin, whereby fees are pretty much non-existent. Okay, it can go as low as 1 Satoshi, and it's fast. It's pretty much instant. Whereas if you transact in Bitcoin with the layer 1 solution, you can take 30 minutes or even up to an hour for the 6 confirmation, right? So I would argue that, yeah, it's already here, but it's just waiting for an adoption. The technology is here.
I like to share something maybe quite contrary to everyone here. I kind of agree with Warren Buffett when he says that gold doesn't grow. Likewise, Bitcoin doesn't grow. Okay? So while there are adoptions, there are technology to improve scalability of Bitcoin and other forms of Bitcoin to make it better, Bitcoins are great as an SOV, a store of value. But if you want to see money grows, you want to see money becomes better, that is smart contract. So I'm more biased to say that if you want to hold something in this bear market, you hold Ethereum, because that is the mother of the smart contract currently. It's not the perfect one. There are still much better smart contract. Me, myself, I'm from Osmosis, so obviously we're going to shield that at the end of the day. But I'm just saying that if you want to find something in this bear market, find something with great smart contracts. And that would be Ethereum.
Yeah, at the end of the day, just remember to do your own research on this type of stuff. We can give you tons of advice, except for financial advice. Remember that, guys. Yeah, but sticking on to the topic of Bitcoin, right? I think majority of the just now I had a speaker up here, but unfortunately they went down. But never mind. On to the topic of Bitcoin, right? I think majority of the people think Bitcoin is like gold 2.0, but I don't think so. I don't think Bitcoin is like gold at all, because we must first understand, to understand Bitcoin is to understand the properties of money. Okay, the properties of money is that it must have three key components. It has to be saleable across space, it has to be saleable across time, and it has to be saleable across scales. Now, what the heck am I talking about, right? Let me just make it very simple for you. Money has to be divisible. Okay, your 5 ringgit can split into a few 1 ringgits and many 10 cents and 500 1 cents. That's the property of money. Money also has to be durable. Okay, your 1 ringgit actually is quite kind of durable. Portable, so that you can easily carry it, and also fungible. It means that $1 in your pocket is the same as $1 in my bank account. So now let's move on to gold. You'll realize that gold is actually achieves all of these properties, but the key difference in gold and fiat currency is that gold is a store of value. Okay, because gold preserves its purchasing power over time. Fiat currency, that paper money you hold in your wallet, it doesn't preserve shit. It doesn't preserve any purchasing power at all. It's meant to inflate away, because we've been brainwashed to tell us that inflation is good, expanding the economy, printing more money, your wages go up, people like to see number go up, technology. But they don't know that, hey, my actually copy, 10 years ago I can buy it for 1 ringgit. Now I can't even afford it for 250. Yeah, that's inflation for you. So whatever you do, fiat currency is going to depreciate. Now that you can't call money, because money, the most important property of money is that it has to be saleable across time. It has to be a store of value. Now let's compare it to gold, right? Okay, so gold is divisible also. You'll be able to split it into tiny gold coins like what people use. But do you know right now, to buy a cup of coffee with gold, you would have to literally use gold dust, You have to go and take a small packet of dust to go and pay the guy gold, Can you imagine that? So it's not as divisible as Bitcoin, because Bitcoin is divisible to 8 decimal points. It is also easily transportable. Talk about gold, right? Because it holds a lot of value in a very small surface area, right? But Bitcoin wins over gold because Bitcoin is just digital. You can immediately send Bitcoin over internationally, whereas for a gold bar to fly it over to, I don't know, the other guy, how many fees is charged over there already? It's so hard to be transported. And lastly, this point right here, Bitcoin is truly scarce, but gold is not truly scarce. Gold is scarce, but it's not truly scarce. What's to say that I pay someone $500,000 tonight, they go under the Pacific Ocean and they find another ton of gold. The supply can be calculated, but the supply is not fixed. The supply is estimated. Where in the case of Bitcoin, right? Bitcoin has a fixed supply of 21 million. There can only ever be 21 million. You're going to have the halving until 2140. And after that, they will rely on payment network fees to go and pay all those miners. And also, one final point. Bitcoin in itself, that it wins over gold, is that it's a payment network. This is what majority of the people don't see. Majority of like Warren Buffett, or maybe as some pronounce it as Warren Buffet, also can. I think of him as Buffet also. Warren Buffet or what's the other guy's name? Charlie Munger. Those two old people yelling at Bitcoin all the time, right? They don't see Bitcoin as a store of value because they don't see it as a payment network. It is a settlement layer that cannot be disputed and altered. Remember back in the Canada protests, I'm not sure if you guys remember, the trucker protests, okay? The Canadian government froze people's funds. That means if you donated as little as $50 to the Canadian protester, the government froze your bank account. That means your money in that bank account is not your money. So in this case of Bitcoin, right, you'll be able to hold it in your own cold wallet, and you know that your money is yours. You'll be able to send money to anywhere around the world, and that cannot be disputed, no questions asked. So no government who manages interest rates, no large corporations, China, US, Russia, they cannot get their hands on it, because you might be thinking that, hey, why not the government just buy a ton of Bitcoin right now? Well, if they buy a ton of Bitcoin, then they're in a big dilemma, because they'll instantly make us all rich. Because that's what they have been trying to prevent. they are trying to stay in power all the time because they want their world's currency, their national currency to remain as powerful as possible. That's why central banks, you heard this before, right? Central banks hate Bitcoin. That's the primary reason why central banks hate Bitcoin. So to wrap all things up, right? I don't think Bitcoin is like gold. I think Bitcoin is a transcendent version of gold, and it's definitely something more that takes more time to look at. Maybe I'll pass it over to Marish. Hello Marish, welcome. You finally step up already. I've been talking too much. I'll pass it to you. Go talk about Bitcoin or something. Hello Marish.
I think he's still at a listener.
Over here, he stepped up as a speaker already. Yeah, Marish, you're fine. You're good. Hello, Marish.
Hello?
Yeah, we
okay.
hear you.
You were saying, Shinji? Well, we were talking about Bitcoin. And then I got cut.
We're diving into the Bitcoin rabbit hole again, as in every session, we just simply dive into the Bitcoin rabbit hole on why it's, I would say, something that will change the world in the near future. Yeah. You want to add on to that point, or should I move on to another question?
Move on to another question. But the thing is, for me, my personal, not financial advice and everything, I totally agree with someone mentioned. I think your point, or Mr. Ishat's point about Bitcoin. Yeah. I can't hear much. Are you there?
Yeah.
Oh, okay, cool.
Yeah.
Move on with another question for now.
All right. Okay, let's move on to another question. We will circle back. We are circling back to Terra this time because I think a lot of people were affected by the Terra Luna crisis, and some people even lost their life savings. So, have you been affected by this debacle, and what did you do? Yeah, this question, Marish. Are you still here?
Yeah, I'm here. I don't want to say it's kind of fortunate that how to say this in a nicer way. I don't quite believe in algo stables. I think because of the experience I had, and I don't see that is something that it is something that is going to be a game changer, but not just yet. So how to put this in a way? So I did not go in either Luna or USD. My stables that I always use USDC and BUSD.
Me myself, I'm very affected.
But of course, last year I see the Luna run. It was like, oh man, I talked with CG and I said, I think we missed it. Should we FOMO in? But nah, we had that kind of, I had that kind of gut feeling saying that I'll go stable, not just yet. So, and then I just watched, it went up like crazy, Luna. So, it's not that I'm happy or anything. I'm not saying anything. Because there's a lot of the bad things is that USD supposedly people go and farm their 20% APY, which is it's kind of sad seeing all those threads, tweets. Yeah.
Very sad indeed. I think all of us can admit that we were really greedy about the 20% APY yield from UST. Even honestly, I was a bit cocky also. I was openly tweeting that, hey, what's the point of putting it in fixed deposit when you can have a 20% yield on a stable coin that is within the top 5 cryptocurrencies in the world right now. Nobody could have thought that it failed so hard, so fast. And let me just shift on over to Caveman. Hello, CG. Sorry for doxing you. I dox you every time already. But have you been affected by this Terra Luna debacle? What do you do?
Actually, we have been talking at length, right, Shinji, in our small group chat. I've always been questioning about Anchor Protocol, and I've been questioning about UST. I generally didn't like Do Kwon. He came off very arrogant and not even, he was too proud. He was cussing every other project around the world. He was saying 95% of the coins will die, and of course he's died first. But unfortunately, he was not really portraying a very nice image to me. So we had a lot of chat, right? Remember, we talked about Anchor Protocol being a real Ponzi scheme. People really, just believing in that self-funded Ponzi of Do Kwon. So I went I had some stake in Luna for a very long time, since July last year. So I was holding it, and unfortunately for this time, I lost most of it because I was stuck in the staking pool. So it was all in the nodes, and to get out of that nodes, I had to go in, unborn and everything. It takes a lot of time. I can't exit fast enough. So I was hurt in that part. But I think the biggest hurt I feel is the confidence in the market. So because of this debacle, suddenly, crypto money or money in crypto is left a lot. People has actually exited the market or lost all their life savings. Friends who actually put KWSP 10,000 into UST and Luna, banking on the 20% APY, which everybody talks about. But if you don't know where the source of the money, probably the money is coming from you, everybody says that, right? So that, I think, the biggest hurt for all of us is that one, that the whole confidence in the ecosystem of blockchain and decentralized finance has got a big hit. And now regulations are coming, which is good. Sometimes regulation, we in the previous discussion, Sinji, we always talk about this, right? Certain amount of regulation, I think it's welcome, because there are too many bad actors in the whole ecosystem. We need to be able to control certain ways so that we're able to keep, the average wage earners, they don't lose all their money. But, like Mari said, right, both of us, we will be discussing, we have been discussing about, hey, should we put money in UST? Should we go and farm this 20% Ponzi? Since somebody is paying for it, why not we go for it? But I think both of us, a little bit lucky, we held back. We kept most of ours in USDC and didn't really jump into this. Otherwise, we'll be in the same pain with everybody else as well. But I really pity those, my friends who got caught in this, went into Luna at the highs and keep on buying because they thought it was a dip, right? Everybody say buy the dip. So it's going down to 90, 80, 70, and they keep on DCA all the way down, and it's all gone now. So it's really important, again, I like to preach the 3 laws of CG, investment in crypto. Always never invest the money you are not cannot afford to lose. Always take profit, and never love any coin besides Bitcoin and Ethereum, because any coin in the ecosystem can go to zero. Luna is the first example.
Yeah, perfect points right there. Although a bit depressing because I would openly admit that I was one of the victims. I even put quite a large sum of my funds over there, and end up getting burnt. But we will talk about it. It's a tough thing to talk about. But I think Balls raised his hand first. So Balls.
Yeah, sorry, Cikgu Isan. I was just going to share. So back in 2021, I still remember this. In February 2021, there was a lot of videos on YouTube shilling Anchor Protocol, right? UST earning 20% APY, and at that time, Terra Luna was about $6 around there. But there was just too many sort of like a red flag to me okay, that this was not going to end well. And upon doing some research for algorithmic stablecoins, right, there was one that really shined. This was back in 2015, if I'm not mistaken. It's called Nubits, NUBITS. It failed due to the death spiral as well. And I did not see any distinction, between Terra Luna and UST. How this would end. But thankfully, I didn't put any money into it. But you could argue that at that time Luna was only $6, and for the entire year, upon finding out about Luna, it went up so much, it went up so high, and so fast, right? So yeah, there's I told people that are close to me, like, that are involved in crypto, right? They only found out, most of them only found out about this UST thing in 2022, right? But I'm not sure whether they put in money or not. But for me personally, I told them what is the risk involved, and you do what you do because it's your money, right? But at the end of the day, we just need to learn from history now. But also one thing that about history is that we sort of want to learn from history, but end up, most of us, we don't really go back and do our research back far enough to learn from history itself, But I really feel really sorry for those who are affected. But the crypto space is here to stay, algorithmic stablecoins will evolve, perhaps to a better model, and I hope that things will really turn from here, Yeah, that's my take on it.
Yeah, thanks, man, boss. And a lot of people got affected by this. Some people even contemplated suicide. So for those in the audience, if you have any of these thoughts, first thing, DM us. We will do our best to help you. Any of us, just DM us. Second thing is go and seek for assistance. The hotline is all over in Google, stuff like that. As long as your life is there, you can always recover from any financial downfall. Okay, because human beings have evolved for so many thousands of years. We have faced every single challenge, so money is just a tool for us to preserve our wealth, to use it at a later time. Okay, you can control it, or it can control you. So move on over to Isan. Yeah, Isan, go ahead, man.
Okay, for me myself, I have never really trusted UST from start because of the flaw in the system. I also was one of the victims of iron finance, so we know how Luna works. We believe something is wrong. Unfortunately, Luna grew very big in a very short time. Not just grow in the sense of market cap and speculation, it was actually growing in terms of use case. I thought that Luna market cap was 8 billion, but when I revised back, it was actually 30 billion, including all the other DApps. So the problem is that UST was used as a real US dollar in other ecosystem. It was used as the real USD in Osmosis. It was used as the real USD in Juno. It was used as the real USD even in Atom. So when I was doing onboarding of people into this other ecosystem, they were exposed to Luna indirectly when they created their LPs. So despite the fact that they are not affected, even me myself, I'm not affected because we don't actually put any money in Anchor, but because we put our money in the LP, in faith that it never goes to zero, because UST goes to zero, it sucks the other LP that it becomes zero. That is where I lost my money in Crescent, because Crescent was using UST as the US dollar, so I lost about 5% there. In Spectrum, that's the only ecosystem in Luna I got into, and I lost another 5% there. In Osmosis also is the same thing. In Juno also is the same thing. So all in all, because of this Luna sucking out all the money from other ecosystem, I lost about 20% just from there of my total net value. And I know that some of my colleagues, they are invested in Osmosis, they're invested in Juno, for example, and they were also helping to UST, thinking it was the US dollar. So because of that, some of them lose their portfolios despite not being directly on Terra. So I think that's the problem. Everyone was having so much faith in the 30 billion economy. They think it's sustainable. Everyone thinks it's sustainable, but yeah, it's a vaporware waiting to drop.
Yeah, it's a time bomb about to explode, man. Because if I had done enough of my research, I think if everybody had done enough research themselves and looked back at the history that algorithmic stablecoins are prone to what we call the death spiral, then we wouldn't have actually jumped.
The problem is that if you are in the other ecosystem, you don't have a choice. Because they don't have USDT, they don't have USDT, they only have USD.
Yeah.
Should they have been given the choice at that time, even if we have extra 1-2 weeks, there is USDC on Cosmos, we don't suffer that much of loss actually.
Yeah, but it's I would say it's a very sad and depressing thing to see it fall so hard so fast. And if you were the one of the people who staked it in Binance, you didn't have enough time also because you will it collapsed in 3 days. You would take 24 hours to decide whether or not you want to cash out. Then Binance will release your funds in about 24 to 48 hours. By then it already collapsed to pretty much zero lah. So Caveman, CG, go ahead, man.
I think Sunny wanted to say something, right? But maybe I do a quick one. I just want to reiterate what the boss was saying, right? Yeah, actually I got in when it was sub 10, and at that time I was a strong believer of Luna. In actual fact, one of a few clubhouse sessions that we had last time in Crypto Maya, I was actually championing that countries' CBDC should be Terra based, because it was a very nice balance of minting and also minting of both ends, right? So I was actually championing that as well. But looking back, of course, like what Crypto said, there's a lot of flaw in the system that we didn't know, and now of course it's open up, which is sad lah. I mean, I don't think so it's going to be the end of all the stable coins or algo stable coins in the market, in the world, in the ecosystem. I think it's going to improve and it's going to get better. And all of us, of course, burned before. We are a little bit more careful, and maybe moving forward, we will be a better judgment of our own decisions, all right?
Yeah, perfect. At the end of the day, it's you have to do your own research. That goes to the point. All the YouTubers, all the quote unquote financial advisors, they were all shilling Luna and UST. Nobody could have predicted this downfall. But if we dug in a bit deeper, there were some people on Twitter also saying that Luna was one of the biggest Ponzi schemes, stuff like that, Ponzi-nomics, if you were to call it. And probably it could help us if we done a lot more research. Sunny, go ahead. Mr.
Yeah,
Sunny.
yeah. Just a few things, but just carrying on from the keyword research. Many people just can't do the level of research that some of us can do. Basically, that's the fact of it. For those of you who can't do your research, or you just don't have that capability to do so, then it's always prudent to just limit the amount of investment that you put into any particular coin or such. Even in my world, I do asset allocation. Some strategists, fund managers, they also do asset allocations, and we would never put more than 15% into any single investment, or recommend that our clients put in more than 15%, because we know, even as bullish, as confident as we are, there's always a black swan somewhere lurking around, and you really don't want to be hit so much so that you're left unable to recover from it. So that's why I think if you can do your research, fine. I think that's good. If you can't do your research, limit the amount of money that you're investing in, and of course, as you correctly mentioned, it's money that you can lose. I mean, for back to Luna itself, I did my research. In fact, I when I looked at it, I found that the Terra ecosystem, I'm no expert in the part where the apps and so on. Some of you may know more than me, but it is really a thriving ecosystem. I mean, very few blockchains, apart from maybe Ethereum and one or two others, has really real life ecosystems which are ongoing. I mean, the Chai payment system in Korea is being used by hundreds and thousands of people who lock onto, or rather who use that particular system. So it was a system there was real life evidence that was thriving. So if you just take the Terra system and put it one side, and I think I've read a lot of developers saying that it's really good, it's fast, it's better than a lot of other layer ones and such. I think it's okay. Okay, I think the problem was basically the of course, as we pointed out, it's basically the UST come Luna algorithmic kind of connection. And even then, I'm an economist. I'm a economist, and I sat through the 1997 Asian financial crisis. I've been following currency pegs, the China currency peg. Even Singapore has a sort of a little bit of a currency peg and such. So I do research and studies on currency pegs and such. So if you look at basically any currency peg, okay, and actually, to be honest with you, the Luna UST currency peg was quite brilliant, because here you had the stable coin remaining stable. And how could you do that? Well, basically you transferred all the volatility over to another coin, which is Luna. So Luna was basically a reflection of the demand and supply of UST. So basically, when you put that together, and I did that, as long as UST market cap went up, then Luna's market cap would actually go down because it was burnt. And as we all know, if a coin's market cap goes down, or supply, goes down, then basically the price goes up. So basically you had a situation where if you put it together, as long as there was demand for UST, then Luna's price would continue to go up. And that was what we were seeing, because Terra ecosystem was growing, demand for UST was growing, therefore Luna was going up. The Achilles heel of the whole thing was actually the Anchor protocol, in my view. Okay, whether it's a Ponzi or not, let's keep it one side. Okay, I would lean a little bit more towards what Do Kwon was saying, basically that, instead of taking money and spending it on advertising and stuff like that, I'm just subsidizing 20%, but it was never ever to be permanent, and they were actually on the way to lowering it down, but okay, beside the point. But what happened is that it came to a point where I think about, and some of you may correct me, was it like 40 or 50% of USD demand was actually anchor demand, meaning to say that it was the genuine demand was just about 50-60%, and 40% was really demand for you getting that 20% yield.
I think it was 70%.
70%. So 70%. Okay.
Yeah, it was majority locked in Anchor actually. When you look at the lifetime circulation versus
it's not really that. What happened is that UST is also absorbed into the Cosmos ecosystem. You see, the Cosmos ecosystem is bigger than Luna itself. That is the one that constitute for the 22 billion value of the, Luna is 22 plus 8. The 22 come from the Cosmos ecosystem. The liquidity is there. It's not really in Anchor. It's actually used as a de facto US dollar in the whole Cosmos ecosystem.
Yeah. So basically, where I'm coming from, if you've gone through the 1997 Asian financial crisis, Indonesia, Malaysia, Thailand, and many Southeast Asian countries, what we had a de facto peg. Currencies were very stable because central banks were keeping it there. But because the peg was so stable against the US dollar, people started to borrow US dollar. Because why? Ringgit's interest rate was 4-5%, US dollar was much lower than that. So, and because the currency peg was stable, therefore FX risk wasn't there. It was very safe to borrow in US dollars. So what happened was companies here were building up a lot on US dollar debt. Eventually what happened was the so-called borrowing far exceeded that of the real fundamentals of the economy's need for US dollar. So similarly in this case, what happened was the yield farming that people were doing on Anchor far exceeded that of the real fundamental need for UST. So again, the majority of demand for UST actually came from speculative demand, if I would term it, because people were just trying to get the 20%. So it was very clear to me that it couldn't last. Because why? Because as a person from the conventional side who have seen pegs being unpegged, when a hedge fund looks at this kind of situation, the hedge fund will say, I've got 60-70% of supply, basically there for not fundamental reason, but they're basically just for speculative, inverted commas, speculative reason. If I could just somehow or another make them panic and all run through that small little exit door at the same time, then I have myself an opportunity to make money. So that one problem with cryptocurrency. It's very transparent. So as a hedge fund, when I presume when Soros or whoever wanted to try and attack the Bank of England or the ringgit and such, one of the issues they had was they didn't have transparency as to how strong was Bank Negara, how strong was the Bank of England, because I could only see official reserves, but there were other things I couldn't see. But when it comes to cryptocurrency, I could see basically how much the Luna Foundation had in their coffers. I could calculate probably to the exact cents how long it would last because it's transparent. So basically, I think it worked against the Luna Foundation and of course Terra and Luna. But basically, my personal belief was it was a speculative attack, given my understanding and my experience with currency packs, how they broke, it was very similar in this time around. So I think that in itself caused the whole thing to unravel. But otherwise, without it, I think it was doing pretty okay. If they did not have that artificial demand for USD, which was brought about by the anchor situation.
Yeah, great points covered over there. And touching back to what you've mentioned just now is don't borrow money to trade and speculate, because a lot of people, just because the UST they deem it was stable, they went on very high leverage, and after that they get wrecked.
Can I just jump in when you mentioned leverage? I'm telling every single person involved in crypto, and this is in all seriousness, why do you leverage? Crypto in itself, volatility is 60, 70, 80%.
It's greed, Sunny. Younger generations, right? We are fucking greedy. Okay.
For us older generation, when we go into crypto, we see, stocks have volatilities of 20, 30 vol, whatever, 40 vol. And you come into crypto, you have double that volatility. It's just mind-boggling that someone would still want to leverage on that or triple that kind of volatility. It's like you're just asking for trouble, basically.
It's bonkers lah, because I never tried leverage before, and I touched it for a while, then get burnt, and I got out, and I never encourage anyone to do leverage. If you have been following us on our Patreon membership, you know I actually ask my Patreon members to never trade leverage, or perhaps don't even try to touch the market at all. Don't try to trade, outsmart the market, because time in the market always beats timing the market. And as long as the assets you do your own research on, things like Bitcoin and Ethereum, you're pretty much kind of set. And also you covered on portfolio management, right, where you never have more than 15% of your portfolio in a single asset, and that's very fortunate. Although I got burnt by UST and Luna, I only in total had about 10 to 15% of my portfolio invested in them. It was a painful loss, but because of risk management and portfolio management, I didn't blow up my entire portfolio. As of some people, they went all in on Luna because they were too bullish, they fell in love with their coins. Yeah, but we have a new speaker over here, Dwayne Ong. Hi, Dwayne.
Hey. Actually, I just pondered upon your this Twitter space because I don't really use. Personally, I'm a Web3 builder, right? I'm building a play to earn mobile NFT. It's really interesting learnings that I get from you guys, knowing the market and what's going on. With this whole Luna crash, right? It also affected the builders as well in the Web3 space. Reason being because stablecoin is the medium where people get to know, people get to buy Bitcoin and also other cryptos as well. And I really agree that futures is one of the main cause of the downfall of Luna, right? Because so much speculation and so much people are borrowing money, and there's literally not enough fundamentals in terms of really trying to build an ecosystem, right? So I think that when it comes to crypto investment, right, there's no filter. It's at least like when you buy bonds or you buy the unit trust, you have a filter. Someone do the due diligence for you. But it comes to crypto, right, you're the filter. So it's so important that to really do your own research, right, and also especially like when the project gets so hype, right, you should be even more careful, and really do the deeper research. Because if you see that I think one of the reasons Luna really went down that spiral is, first of all, they are against their whole core value proposition is against they are fighting against the fiat currency, right? Because they say, hey, we don't need to have a back, right? We can be algorithmic stablecoin. But this is definitely a very sensitive issue, and and they are getting so big, and as this whole thing affect, right, actually it affects the whole entire ecosystem. Even for builders ourselves, right, we will see that, hey, the sentiment, the confidence, but the intention of coming into the Web3 ecosystem, it should be in the name of innovation, right? Like we're trying to change or make a world a better place, opening up a global economy. But with this whole incident is quite sad, to see. But I really think that any stable coins, right, it should be thoroughly thought through, and also work with regulars as well to see how can this be avoided again. And I'm glad to see that there's a lot of countries where they are trying to intervene right now and see how this wouldn't be happen again, and also to see how a potential stablecoin can be made up again.
Yeah, again, very thoughtful points you covered right there also, and it all goes down to I think back to what Mr. Sunny mentioned on the 20% APY on a stable coin, which really drove up the demand because everybody just thought that this wouldn't fail. It's too big to fail mentality, which is precisely what led to the 2008 financial collapse of the Lehman Brothers also, because they thought that mortgage is supposed to be secure, and everybody went into mortgage and stuff like that, and they didn't foresee that it's actually such a big to call it bubble in a sense. But let's hop on over to our last topic of the night. It's a very simple question. Is there still hope for Luna, for this ecosystem itself, for this project in general? We will go through each of the speakers, but we'll start with Isan first because Isan raised his hand. Go ahead, man, Isan.
Number one, I'm going to say Luna is dead.
Okay.
So, sweet. No hypocrite. I think Luna is literally dead. They only have another 300 Bitcoin. They can literally do anything with it. Most likely they're not going to give anybody. They already informed clearly that the Luna Foundation decides to fork the chain. Not to fork, it's a snapshot. And they're going to let the old chain die. Well, actually they want to hard fork, but a lot of people go against it because there's a lot of block after that. The new chain is not even anywhere near convincing. Everyone has lost faith. And there are many other Cosmos-based chains which are better than Luna. A lot of EFs are already running to the other chain. One of it, Status is running back to BNB. So yeah, short, sweet, Luna is dead.
Right, thanks, Isan. So one person said Luna is dead. Probably hop on over to Urshad. Urshad, is Luna dead, or is there something more to come?
For me, my point of view, Luna might becoming a shit coin. People will still buy for the degen. Maybe they buy $100 for the sake of people pumping it. But I saw for the past week it's happening because it keep on dropping. But at the end, some TikTokers just say, okay, you just buy $100 worth of Luna. If it burn, it burn. If it goes to at least you can gain 10x, 20x or whatever. But again, this is not financial advice. This is what I see lah. I'm agreed with all the speakers. It might be dead, but people might treat it as a shit coin.
Alright, so 2 speakers voted for Luna is dead so far. Dwayne Ong. Oh, you have to.
I think it will be like a meme coin. If you compare the market cap versus Doge and Shiba, right, it's still really small. They have a really strong community as well, right?
Yeah, it's just a matter if any influencers pushing it, people don't care about the fundamental anymore. People might push it as a meme, so it's a meme economy, or I don't know.
Yeah, if you look at Ducon, right, his Twitter followers have gained by 400,000 followers because of this whole entire incident, right? And yeah, you'll be just another story to sell where and what he's going to do next.
Yeah, makes sense.
And also one more thing is that there are a lot of people are stuck inside there, right? They are vested, so they have great developers as well. So I'm not saying that I'm supporting them, but just looking from a builder perspective, that he will be still lingering around and doing something, right? But whether would he able to build, if the topic is about can really algo stablecoin really works, right? I think I have no answer for that. But would Luna be still exist, and also the Terra would be exist? Yes, I think it will still around because they are in the crypto market. I think majority of them don't do research, and most of them are just degens, right?
Very true. Actually, we are all just degens, okay? I mean, who could have foreseen this massive collapse? I mean, some people have foreseen the collapse of Terra Luna, but I think nobody anticipated it to be this fast and this hard, So, yeah. So I think your answer is what's your final answer, man, Dwayne? Is it yes or no? Is there still hope for Luna? Yes. Is there still hope for Luna? No. You want to get to a definitive answer before we move on to the next speaker?
I think they'll still be around, but I wouldn't be, putting confidence in terms of they able to build another stable coin, right?
So it's probably
No.
No lah. Okay.
Yeah.
Okay,
But if you're a degen, you can just buy like, you know, short-term trade.
yeah. Very simple. If you're a degen, yeah, because some of the in our Telegram group also there were people asking, you know, should I buy Luna or stuff like that. For me, it's like maximum you just put $10 in, just speculate $10. That's the only thing I will do. Then after that, I'm no longer going.
Totally agree.
It's just, you know, in case it blows up, or in case if Dogecoin comes with a burn plan, which suddenly burns, like, okay, we'll talk about this later lah, whether burning Luna will it work or not, but I don't think it will. But we'll hop on over to Marish first. Hope for Luna, yes, no?
No. There's no hope. There's no trust. That's from my personal view.
Don't
Because-
milk the dead cow already.
Yeah. So
No.
no hope for Luna. So 4 speakers voted for no
Because
hope.
I just want to add on, because that iron finance fiasco is similar. So they try to come back, but they just can't. They did some, I think, few innovative solutions, few innovative way, but they just can't. There's no trust. The trust is broken.
Exactly. And it's also the case of where if UST ever returns to its peg, just a big if, everybody will sell. Right? So it just reinforces the trust is gone. I mean, if ever UST goes back to the peg, I will also sell, because I don't know why I've been holding on to it, but you know, Binance staking locks your funds for 48 hours, and by the time UST has already dropped to 10 cents, so you can't sell anyway. But on to the next speaker, Balls. Luna hope, yes, no?
I think I would have to say with a high level of certainty that, yeah, Luna is gone. I mean, the blockchain will still be there, okay? It will still be there, but no one's going to touch it anymore. The trust is broken. And even if the proposal from Do Kwon goes through, the trust is already broken, right? Unless probably you could argue that, you know, there's a secondary proposal that says to burn the Luna and get rid of UST, right? Then maybe there's some small glimmer of hope. But all in all, I don't think it's I think it's dead, basically. But one more thing, if I could add on, if you guys watch the movie The Big Short, right? It's about the 2008 crisis. And at the starting of the scene, there's a quote from Mark Twain, right? It says that it ain't what you don't know that gets you in trouble. It's what you know for sure that just ain't so. Right? To me, this resonates with me a lot, and especially to this crisis.
Yeah. Again, good points right there. And so far, I think majority already voted no. What about CG? What do you think? Luna hope, yes, no?
Well, I'm waiting for Elon Musk to buy it, so. No, of course it's dead. Come on. How far can you go some more with this, man? Today, I just want to let you go. Today, I had a lunch with a very close friend. His first question when I sat down, even before ordering food, was, should I buy UST and Luna now? I said, what? I'm a degen. I don't even buy. So please don't touch Luna or UST at all right now. So if you have, I mean, we're hoping. I just voted on the latest Do Kwon proposal, and I voted no because it was really not helping anybody. And he could have, proposed something like said that you just burn the token and bring at least something to peg or compensate the UST holders, because a lot of them really got burned. And he is now facing court cases in I think class act suit in Korea. Parliament has called him to answer for all these things. So it serves him right, to me. I think he was the cause of the whole issue. I don't blame the technology. I don't blame the developer. He was the one that was upselling that whole concept of UST anchor and was shooting down every other token. So, I mean, to me, it serves him right. So I think it's dead. Yes, for sure. I wouldn't touch it. I don't advise anybody to touch it. And that is financial advice. Please do not touch that. I mean, there's some. If you want to spare that $100 or $10, go and buy Bitcoin. Thank you.
Great point right there. Yeah, I think it's if there's only a financial advice we could give, it would be like never ever touch Luna. At the most, just put $10 in and just go don't care about it. If it goes up, it goes up. If it goes down, then it's just $10. Don't go YOLO and put 20k in it like KSI. If you guys know KSI, that famous YouTuber. Yeah, that's what we call brainless. Okay, because he bought 2.8 million and now it's, I think, $3,000 or $300 only. Don't follow shillers or big YouTubers like this because most of them are either as less knowledgeable than we are or pretty much at the same stage as we are, okay? They're just famous only. So we'll hop on over to Mr. Sunny. Mr. Sunny, Luna dead or Luna alive? Still hope, yes, no?
I think after 10 people saying no, it's puts a lot of pressure on me, right? I think my view is basically almost every speaker spoke about trust. If Do Kwon and basically the Luna Foundation, if they're smart, if they take off their technology hat and put on their finance fund manager type of hat, then they would actually try and save Luna and UST. Why am I saying this? Just give you a bit of a story, a very short story. I was approached before by a fund manager who was trying to sell his fund to us. This fund manager had previously another fund which actually kind of blew up or basically got suspended because one of the assets they were holding went sour. So basically investors were stuck in that particular fund itself. Okay, and yet there were institutions investing in this second fund that the fund manager was actually promoting. So it kind of like, you scratch your head and say, wouldn't that be a red flag? Your first fund basically, didn't really make it and got stuck. And why are institutions, these are smart people, and these are institutions which are not stupid, are still investing in the second fund? And then it occurred to me the answer was basically they were actually managing it quite well, i.e. the first fund. Even though it blew up, they were talking to investors. They were actually updating investors periodically. They were putting in effort to try and recoup some of the losses that investors had made in that particular first fund. So what they were doing was while investors had lost money, they were actually gaining a lot of goodwill, and they were actually salvaging their reputation. So reputational risk, which is actually a negative thing, was actually very low for them because they were doing the right things. And because of that, people invested in the second fund because they said, when you're in the finance line, these things happen. Nothing is perfect. Things blow up. Fine. Markets don't go against you every now and then. Fine. What's important is you make sure you don't leave your investors behind. You take care of them as much as you can. They may lose money, but they've paid you your management fees and everything. You do as much as you can to try and salvage it as best as you can. Okay, and therefore, I don't mind investing in your second fund. And in fact, I feel comfortable because if the second fund goes down, I know your reputation is that you will protect me and you will do as much as possible for me. So bringing that over to this current situation, if Do Kwon and the Luna Foundation sees this as a very typical, the project failed, let's chuck it one side and let's start anew with a second one, I don't think the second one will succeed. Because people will say, what's going to stop you from doing the second to the third to the fourth? Because failure is always there. But if they take care of Luna, and I don't know how, whether it's a burn, whether it's somehow integrating the old Luna into the new ecosystem so that there's utility to it, and so on and so forth, I'm not sure. That one, I think some of you are smarter than me on that. But all I'm saying is, if they're smart, they will not just create this impression that they're chucking it one side. They would somehow or another try and keep it connected to the overall so-called Luna environment, Luna ecosystem, old and new together.
I just want to add one thing. When you talk about Luna, minus the finance, as a human capital, Luna is rich with a lot of human capital. That's why a lot of chain are wooing all the developers from Luna.
Yeah. Thank you, Sunny. Thank you, Isan.
Okay.
Yeah. We do have a new speaker coming out. Let me just approve Lost Stars over here, and then after that, I will pass them. Hi, Lost Stars. You have anything to add? You want to join in onto the whether there's hope for Luna or no train? Yes or no? You want to answer that question?
I'm sorry, I accidentally hit it. Sorry, I just want to hear in. Sorry.
Oh, okay. I mean, if you have anything to say, you can chime into this topic. It's an open session anyway, so yeah. But let's let's touch on over our last question. I want to drag this session a bit because since we are just ending this session with Luna itself, and the majority of the speakers already voted no, there's no hope for Luna. And for those of you audience out there, again, I repeat, if you want to invest in Luna, well, the only financial advice we can give tonight is, don't touch that shitcoin now, okay? At the most, just put in $10, just close your eyes. Wherever it goes, it goes. Following what CG said, right? If you want to invest in this type of shitcoin, you might as well put your money into Bitcoin because you know Bitcoin is definitely going to stay for the next, indefinite amount of time. But let's say there's this possibility running through my head that Doquan implements a burn mechanism, a very effective one. In fact, I don't know what the figures are because I'm not a developer. Is it possible to still revive Luna? And in this case, right, what of those people who have bought Luna at the dip? Because right now, buying $10 of Luna is like what? 87,000, 90,000 Luna, whereas last time Luna at its all-time high was $120. So how can he actually make this benefit the older investor and not all the newer investors? Because now if he implements a burn mechanism, right, then all those people who recently got into Luna, they will just profit like crazy. Probably we will start with Isan first. Isan, you want to take this? This burn mechanism, will it work?
Okay. When you talk about burn, where does the burn come from? Does it come from the user? Does it come from the fund? If a burn comes from an uncirculated fund, it doesn't have a purpose. You see, the most important thing in a crypto is the circulated value. Most of the scamish coin also do burning, but they burn from the uncirculated reserve. So at the end of the day, the price doesn't go up. So the only way is they have to burn from the user. Then only the value go up. If they want to burn the value from the user, means you have to burn from the transaction. If you burn from the transaction, you increase the transaction fee. Eventually, it will become as expensive as the other chain, and people will still move away. So no, I still think the whole thing needs a new home. No more Luna. Probably a new Luna, but not the current Luna.
Wow, yes. Again, you mentioned that point, right? Because the circulating supply is what's held by all the other wallets out there. So to essentially burn that amount of Luna, right, is to also burn whoever is holding Luna. So that wouldn't make a lot of sense. Ursha, you want to chime in on this? We'll go through each of the speakers on the burn mechanism. Will it work or will it not work? Are you still here, Ursha? Maybe Ursha is taking a break. Probably you'll hop on over to Dwayne. Dwayne, you want to chime in on this burn mechanism? Okay, I think. Okay, Dwayne, you still here?
Yeah, sorry, I was driving.
Yeah. Drive safe. Please.
Okay, actually, for me, it's definitely forking over to the new ecosystem where a new token, right, is a much more better option, right? And I think that the question to ask is like, is Doquan able to regain back the confidence of the community? They have a really strong community with the dev team and a strong ecosystem, right? And I don't think that burning itself, that story will sell, right?
Yeah. All right. Okay. So forking might or might not work at the end of the day, but burning definitely will not work. Marish, you want to add your thoughts on this burning mechanism? Because a lot of people are discussing about this.
No, it won't work. Yeah. Burn from where? From my wallet.
Yeah, right.
And then what are you going to give me in return? So no, it won't work.
Yeah. Because you see, majority of the people don't really understand what burn means. They just assume that you burn, then there's less circulating supply, then the Luna's price will go up. But where do you burn from? What are you going to burn? So if you burn from the circulating supply itself, you're going to burn the user's wallet. So it doesn't make a lot of sense. Balls, your thoughts on this burn mechanism, work or do not work?
Yeah, no. I'm just going to give a short answer. Probably not.
All right. CG, burn or no burn?
I have an idea, but I think, of course, it's a very layman idea. Of course, I agree with everyone. It has to burn from something. You cannot burn from thin air, right? You have to burn the Luna is now in circulation, the billions and billions and trillions of it. So the one mechanism is for people to be able to deposit all this Luna in exchange for a receipt, like an NFT or something like that. That's your token of ownership of certain quantity of Luna. In return, they will burn the ecosystem, that Luna, so that the circulating supply will go down, and technically the value should be coming up to save the ecosystem to use, and of course then exchange with a new token, maybe swap with another Luna 2.0 token, so that the chain continue running as the same chain and continue the ecosystem running. But I agree, at this point of time, it's all about trust. It's all about the whole optics of Do Kwon. And in order for the Terra ecosystem to survive, probably they have to kick him out first.
Yeah, man. This guy is way too cocky. And if you guys are wondering what this Do Kwon cockiness is about, at this space itself, I pinned up the tweet where I wrote a thread about the Terra Luna debacle. And you'll be able to scroll through this session and see that there's a tweet about Do Kwon insulting and battering people, saying that people are poor, retarded, and a lot of other drama stuff. So it's a really cocky CEO. And he formed a really cult-like community that would literally die for Luna. So that's a major red flag and a big lesson for all of us to learn. So Mr. Sunny, burning mechanism work or don't work?
In reality, difficult. 6 trillion right now we have.
Yeah, crazy.
I think a week ago or so, when it was basically 1 billion, or was it 1 billion?
350 million.
350 million. Yeah. And even then, price was like $1 or $2. So in reality, even if you burn, it doesn't necessarily because as long as you have that algo in, I believe that basically it's an impediment for Luna to move up. But having said that, I think the last speaker also was giving some kind of solution. Sometimes it's not the actual burning that or the quantity that's burned that's key. It's the fact that there's a mechanism in there which probably makes sense. I mean, just for example, again, I may be totally wrong. In the new ecosystem, which is the new Luna, the new UST, the one that they're going to set up now, and so on after the fork and so on, I'm pretty sure that the Luna Foundation, Do Kwon, whoever, there's profits to be made. If they incorporate one line there to say that we are, because of what happened, we are using all profits that we make in this new ecosystem, or maybe somehow or another adding a few basis points to every transaction, and using that money to bring it over to the old ecosystem to burn Luna. It will take time, and there's no guarantee because it really depends on the success of the new ecosystem. But it will help the previous ecosystem. That optical thing or that gesture itself, gives some hope to the overall system. Yeah, it's going to take time. It may not even work, but I think, again, like I mentioned earlier on, reputation is very important. Showing that you care is very important. So if they just do that itself, I think that would be actually a good thing. So the burn mechanism may not work, but putting in place a burn mechanism will give them a lot of goodwill.
Mm-hmm. Yeah. So I think all the speakers all agreed, in summary, what we've covered for this entire session. No, there is no hope for Luna. If you are still hoping for Luna to go back to $1, that's virtually impossible, because the market cap will be at least 2 or 3 times, or maybe even 10 times larger than Bitcoin's current market cap. I hope you guys understand what market cap means in cryptocurrencies, because if you don't even understand what market cap means, then you probably need to work on how you do your own research, because market cap basically means what's the value stored in the cryptocurrency itself, and you always compare it with the top cryptocurrency, in this case Bitcoin, Ethereum. Both of them combined to have about 60% of the entire crypto market. So you just make a comparison where the current Luna crypto market cap at its current price, for it to reach to $1, how many X is it? How many zeros is it that do you have to add behind? And then after that, put that zeros behind the market cap. And is it feasibly possible or not? So yeah, I don't think it will ever reach back to $1. It's pretty much impossible. But the session has gotten pretty interesting, and there are still quite a bit of listeners here. So we do not want to cut the sessions short. If you guys have any questions over, I think we are at the end of the sessions already. I no longer have any questions left. For those of you who have any questions, and if you're shy to step up, just DM me or any of these speakers, I hope, and then we will ask your questions. Otherwise, you can just step up to be a speaker and join in tonight's topic. I just want to stretch this session a bit further because there's still quite a few people left. Sunny, you want to take it?
Yeah. I have a question. I read somewhere that actually you can still stake your Luna at this particular point, if I'm not wrong. Someone can correct me. I just read about it, or someone mentioned about it. Is that true? Number one, and if you can, I also read that the APY is extremely high. Is that true?
Yes, both is correct. Both is the old chain is still running, so the staking system still works, and because not many people are staking, so the APR is still high. Correct.
What is the APY now?
I think probably at least to the hundreds or thousands of percent.
Yeah, something like that.
Yeah, that's what I read.
Because the problem is with the way Luna is minted. So Luna is minted to maintain the peg. Since the peg is still not there, it will continue to be minted.
I think they stopped the mint. I'm looking at the circulation, and the circulation has actually kind of stopped over the past. It's gone up a little bit over the past couple of days, but by and large, since the 15, 16, 17, 18, it's basically about 6.532 trillion. So I remember reading that they've actually stopped the minting. Again, I stand to be corrected, but it does seem from the numbers itself that they've stopped the minting.
Mm-hmm. Yeah.
They fought the chain already to stop the minting, but then the reserve for the staking is still there.
I see. So now it's pretty much
it's static. The chain is static in the sense that it doesn't grow anymore, but then the reserve for the staking is still there.
So the incentive for the staking is still there, though the APY is crazily high. Yeah. We have a new speaker up here, NFT trader. Hi, how are you? You want to?
Hi, the futurist. Is everything okay?
Everything's great, man. So what do you think about the next session? You want to join in on this Luna drama right here?
Yeah, exactly. Actually, according to whatever they have just published recently, they are just going to launch the Plan B version 2 of Luna. Something similar to the process that we have already witnessed for Safe Moon. And I think it is just going to have some kind of the thing similar to reduction of total supply. And the number of the tokens will be definitely decreased. But the price of launching, actually the name of the new Luna 2 is Classic Luna. It will be launched 10 days later. I think the price is going to be higher than the current price of Luna version 1, but the number of the tokens from each wallet will be decreased. And we will see and we will witness a kind of migration from version 1 to version 2. But the speculation is just right now, so isn't complete for the prediction of the price. How much is going to be launched? If you remember or not, the launching price of Luna version 1 was 70 cent, if I'm not mistaken. And I think the same thing will be going to happen. Something they tried to do some process by pumping MLN token. Previously, they have done it 3 months ago to control the price of the Terra UST. They did that thing. That time it worked. MLM pumped and it decreased the control of circulation and total supply of stablecoin Terra. But this time, apparently, that they did do it 4 days ago, pumping MLN. It didn't answer, and it is going to be just supplied by new plan B.
Mm-hmm. So basically, there is a plan B for Luna coming up. Whether or not it will perform ultimately depends on, I think, how the project team manages it and how the community treats it as well. Okay, so yeah, thanks NFT trader. I think that's your point right there, right? And at the end of the day, is there still hope for Luna? I think some people are going to argue yes, but we will still maintain vigilant and just hope and see lah. You know. Another speaker just came up. Taiwo, hi. How are you? You want to chime in on today's topic?
Yeah. Thanks for giving me the mic. So, well, I have a question.
Before that, Fitri, sorry. I have an emergency. I have to leave the space first. Sorry, yeah?
Hey, thanks, Isan. Please go ahead. Yeah, bye.
Okay, so I have a question on Luna. So, we all know about their plan A, right? In which they plan to make Luna Classic, right? So, my question is, like, right now they're having a vote on against or for the plan, which is plan A, in which they plan to, I don't know, make a new token called Luna Classic. So my question goes to thus. So let's say there are more people against it than there are for it. What do you think the next plan is gonna be? Because we all know that this plan A that Dokwon brought up, it's a bad plan, because which exchange you will ever list Luna Classic, like there's no future for this plan A. But my question is that, so once more people are against this plan A, what can you speculate, or what can you think of that they're gonna bring out, or what can you just, I don't know, imagine? Because I'm definitely sure they have smart people there, but what will ever come to that? What is your own opinion for the future of this Luna? But we all know that it has no future. But what's your opinion if this plan A doesn't go through? So that's my question.
I want to come in. First off, when you say go through, let's be very honest. The voting mechanism of so-called going through is all screwed up. You have to use the Luna tokens to vote. But the thing is that the people who are voting are the people who bought Luna at super low prices. This is not a snapshot of Luna holders before the DPEG situation. So a lot of the people you see in the forums lost all their money, actually have theoretically no say on the next vote. Second thing is, this ridiculous idea that the vote actually matters. You know what? If they choose to make a fork, they can make a fork. If Terra Labs makes a fork, they don't need anyone's consensus to do it. They'll just go and create a fork. And the validators will come along and say, oh, there was consensus. There's no, strangely enough, there's no transparent democratic process for this. Like, if they announce quadratic voting on Aragon, you know, the on-chain voting platform, that'd be one thing. But Terra's voting mechanism on Agora, it's ridiculous. Again, you could just buy 1 million Luna tokens like last night for $100. It's ridiculous. For the Do Kwon proposal versus the Fat Man proposal, the idea of forking Luna and then telling the community who 90% disagree with him, which he will probably do anyway, those 90% of people who disagree with him are probably 90% of people who lost money along the way. It's the 90% of people pre-snapshot who believed in the old Luna. So really, there's actually nothing going on here, guys. He's just announcing it. He was trying to get confirmation of his own proposal, which he was so disconnected from reality, he didn't realize that no one wanted to support him. I think that inside of Terra, in Singapore, he probably has a bunch of yes people who do everything he says. Now, obviously, some of the members have resigned, but when you have a fork, the developers who are building the main DEX and AMM and so forth, they're not coming along. I have seen 0 reports of any of the non-core dApp projects going with him. They do not support him. There's only a handful I've seen on Twitter actually announce their support for the fork. I've seen like two projects. Two. Most of these other projects are not following along. They're just going to go to other chains. So the fork will have nothing on it. It will be a ghost chain. There will be no UST. And the core projects were all UST related projects, like Mirror Protocol and Anchor Protocol. There's no reason for them to even be around. They could do like USDC, but the APY will be like 3%. Like, they'll be less competitive than just using Binance. You know, so I think we got to get away from this. I think we got to start our lives over again. If you lost money, you lost money. Get the fuck over it. Get the fuck over it. What the fuck is wrong with me constantly talking about Luna? Man, if I was going to fork a new chain after having a huge failure, you think that failure 2.0 is going to be better than failure 1.0? Come on.
Yeah, great words right there. I think it's ultimately boils down to the trust, right? Because the trust on the
No, actually, I wouldn't say so. It boils down to the developers. You can create trust along the way. As I just said, the people who don't trust lost money. They have no voting power, right? They have no voting power, even if they get the airdrops. The people who got the tokens post-peg, you know, they're gonna be there too. And the problem is, within the first 3 months, if there's no clear development, if there's not enough projects migrating, if there's not enough money to basically bribe developers to move to this new chain, because developers and projects are getting offers left, right, and center to move to different chains. Like, I mean, I don't want to say the names, but these projects are getting offers, and I doubt that Dokwon can match them. It's about developers making those new projects immediately. Like, they have to have a plan. But if the plan is to create a new chain and then within 1 year build like 3 good dApps with no UST, right? That's the problem.
Yeah, because you mentioned that without UST, what's Luna, right? Because initially UST was the one that drove the demand of Luna up, because UST staking at Anchor Protocol was pretty damn high.
Well, the liquidity of UST meant that the costs of using the network were very low. The reason why costs were so low is because liquidity pools are so large, right? And the UST thing, it enabled an incentive mechanism for lots of new TPL. Terra Luna, you know, went from 1 billion to 16 billion from April 2021 to by November 2021. So with this huge amount of TPL, you could do quite a lot of stuff. And it just means that the cost of swaps using wormholes, for example, becomes a lot cheaper when you have huge amounts of TPL, right? Like, you can wrap and bridge and wormhole any major asset with almost no impairment loss, correct? Once you have more than 1 billion or 5 billion in TPL. And you know what? That's really hard, because the top 10 chains, most of the top 10 don't even have that amount. Like, Cardano has 200 in TVL, 200 million in TVL. Yeah, 200.
Yeah. Cardano's TVL is it's a bit shocking to have such a low TVL. But,
well,
all right.
The reason why it has such a low TVL is because the APY on anything you stake on is relatively low, right? For example, if you stake Cardano, you get about 3 to 4%, right? If you stake on any of Cardano's new dApps, you'll get about that for that native token of that. Actually, that's a pretty normal amount nowadays. I mean, if you go stake USDC, if you go stake, I don't know, most native coins or most dApps that are huge, like, Aave, for example, right? It's about that amount. It's crazy APYs, where yield farming incentives are rare, actually. And, Aave is a successful project, but it's successful for being the first. And most of their APYs on Aave are very low. Very, very low. Like MakerDAO. What's MakerDAO's APY on Maker? It's like that, right? What's its TVL? What's its APY on Daicoin? It's about that amount. So, you know, Cardano is in a situation where, for most of the Cardano users, they would just rather put it natively, not on Adapt, natively on Cardano's Yoroi or Daedalus wallet. But don't forget, XRP has the same situation too. Their TVL's very low, and they've been around for a very long time. Avalanche, for example, its TVL isn't even that high considering how high it is. BNB's TVL isn't really that high, to be honest, either. I mean, if you look at the TVL, it's almost entirely Ethereum now. The dominance of all the Ethereum dApps like Curve and Aave and so on. And Maker, I believe I looked at DeFi Llama last night. Maker is number one right now, right? Because everyone's moving to DAI and things like this, and they're looking for safety. They think like a stablecoin is safety, you know? But whatever. It just shows you that the market lacks sustainable yield farming options right now. I mean, even if USDP, Tron's new USD, is offering 40% APY yield, no one trusts it. No one wants to go over there anymore. It's gone. Like, yield farming for a while has been broken. I mean, just people lost too much money, man.
Yeah, I think the ultimate lesson to learn right here is that even though the TVL can seem high at the surface, but high TVL doesn't mean it's necessarily good for us, right? I think majority of the people are just attracted with high APYs, and after that, you know, it's the same thing like UST. Everybody is just.
I also don't forget, it wasn't just that; it was the locking mechanism. A lot of people got raped. Okay, I'm not allowed to say that. A lot of people got fucked because the B Luna locking mechanism, or not on Anchor, but on Pylon and on other on Astroport and so forth. Locking mechanism,
and also the leverage, right?
Yes, well, that's different because they all got liquidated. The people who didn't get liquidated, who were still locked in, were using the non-collateralized versions, but bonded it, right? So they were locked in for 6 weeks or 6 months. Lock-in periods, there should be some study, but clearly lock-in periods will lose you money over time because the value of these tokens just are not going up gradually. This is not, the way it was presented was like, if you bond UST, if you lock it in, it's like owning a bond, right? It pays you back cash flow every month, like sustainable interest. You know what I mean? But it's not. So, for example, there's some projects that do stablecoins 3% APY. You know what? You're gonna have to get used to that. You just have to be happy. Don't lock shit up.
Yeah. Thanks, man, Jimmy, for coming up here and speaking a lot of truth to the space. And at the end of the day, money is just money, right? And I know some of the people who have lost their life savings on this, but I'll just repeat what I said earlier during this session. Money is just a tool to preserve our wealth and use it at a later time. You can control it, or it can control you. So as long as you're alive, consider that human beings have evolved for thousands of years. We've been fighting some, mammals or shit like that. You will go through this as long as you're alive, and definitely your life is more valuable than just money itself.
I gotta say something, The problem with that thesis is that a lot of people made a lot of money recently, easily. You know what? They lost it easily too. As soon as you can make it easily, you'll lose it easily. And I think, yeah, sure. A lot of the people I know who lost money, the reason why they're not killing themselves is because they're not focused on money. But you know what? People who preserve money, you're Singaporean, aren't you? Singaporean and Malaysian?
Malaysian.
Okay, so you're Malaysian Chinese. What your grandfather would say is not like that. He would not say that. He would say to build intergenerational wealth, focus on creating safe assets. Money is the most important thing. Because historically, for your people, they were basically annihilated by ethnic Malaysians during the intra-communist period back in the 1960s. And even before that, when they were in China, huge civil wars. Money was very important. Money is everything. If they didn't have had money, they wouldn't have been able to go to Malaysia. they didn't have money, they would have gotten killed in the 1960s of being accused of communists. It's not. If people took money more seriously, they would have done more due diligence. Now, I got burned partially, but one of the reasons why I got burned was because I put a lot of my faith in a 25-year-old who knows less about finance than my sister does, or my wife's boyfriend. And it means if your grandfather was here, he would ask you some basic questions. Who is this person? How much does he know? Have you ever seen him? Can you hold anything that he sells you? What is he selling you? Why is he selling you? Your grandfather take money very seriously, right? A lot of people simply didn't take money seriously enough. They put faith, hope. Hope is not enough to make sustainable wealth. 20% APY was a hope. Hope that they'll figure it out. Hope that they'll change things to make it better. Hope, it's not enough.
Right. Again, thanks, Jimmy, for the blunt points right there. I think we all needed that. And just remember, only invest in what you can afford to lose. Okay, that's the takeaway of the session tonight. But I'm going to end the session in about 1 or 2 minutes. I'll just allow the earlier speakers over here to give their last words. Mr. Sunny, economist over here, just so you guys know. Any last words for tonight's session? Thank you for joining us. You'll be invited for future sessions again.
Thank you very much. Thanks for setting it up. I think I've learned a lot also from everybody. Well, I think just to round it up on the Luna episode, I think in the real world, in the normal world itself, if a company is facing trouble, typically the shareholders would ask the management, let's try and turn things around. You stay and we go through it, rather than basically the management saying, let's set up a new company. It's too messy here. We have a better chance if we set up a new company, and let's all just try and move over and build a new market with a new company. And I think that's really where the existing Luna shareholders feel a bit betrayed, and they're being left behind, an orphan child, so to say. And I think that's really where it will be interesting to see, how this thing pans out. But I think by and large, that's it. I think if it's forked, if it moves over to a new ecosystem, then really is like I mentioned earlier, whether Do Kwon and the Luna Foundation still wants to show that they care. If they don't, then basically this is a project which is on its own by itself with a lot of problems.
Yep. Thanks so much, Sunny. Dwayne, developer. Mr. Developer, you have anything last words to say for tonight's session, Dwayne, before I officially... You're still here.
I think a great session today. I learned a lot from everyone and hearing from different perspectives. I think any project, right, you definitely need fundings and also innovators and talents, right, to be in the ecosystem in order for it to strive. So I wouldn't say it's like the totally dead end for Luna when they're forking over to a new token, right? But I think it's always do not move by emotion, but do a lot of research, and also don't all in, right? Anyhow, crypto is still a very risky investment, and it needs to be taught thoroughly, right? And don't put all your savings inside. I think it's a good lesson learned, and for those that has badly affected, I think it's not the end of the world. I think it's a good learning lesson. You lose money, but you learn a huge experience. So I think we are in that era where we are trying to innovate and also changing the whole financial system. So yeah, I'm looking forward to it, and everyone just stay positive.
All right, thank you so much, Dwayne. So thank you guys so much for all your thoughts tonight. And I think the ultimate point to drive back right here is that if you're an investor, make sure to, again, repeating what everybody said, invest what you can only afford to lose, always take profits, and never ever fall in love with your bags, because you can only fall in love with Bitcoin and Ethereum. Okay, so that's the safest play options available. All right, good night, guys. Bye. See you guys soon.